Hey guys, John here, and this morning I found out I was approved for a personal loan that I'm using for debt consolidation to pay some credit cards and finish off my car, and we'll see, maybe some other stuff. So the interesting thing about this personal loan approval is that it was my second try to get a personal loan. It was with a different company, and the first time I was declined due to my debt to income ratio. And this time I was approved. And I want to talk about what I think the difference is, even though I can't be sure. So this is anecdotal, but I wanted to share this out, and maybe this will help you if you are a real estate owner, if you own multiple properties under your personal name, not under a business, but it's actually, they're considered your properties. Then that debt will be attributed to you, and that will make it harder to get things like a personal loan, or to refinance your student loans is another thing that I've run into trouble with this. So basically what I did is that I called, so I was approved by Marcus. So the first thing I did is I went to NerdWallet and I looked for like the best fixed rate personal loans, and the result was Laurel Road. And Laurel Road ended up declining me, and I also had some issues with their software. So I think they're kind of like on the newer side, but good for them. They're offering really great loan terms to those who can qualify and who can kind of make it through the assumptions that their software makes as well. But they ended up declining me for the debt to income ratio, and then I went to LendingTree and I did a pre-qualification. So with Laurel Road, I did not do a pre-qualification. This time I did a pre-qualification with LendingTree, and it told me that there's basically two providers that would be happy with me based on what I input, and one of them was Marcus. Goldman Sachs has a service called Marcus. So I ended up applying to that, and I ended up getting approved. But I didn't just apply and get approved. I did some stuff in the middle that I think helped. So after I submitted my documents, I also submitted bank statements showing my tenant income, and then I called them. I ended up calling them several times to say, like, are we still good? Are we still good? And I actually had to kind of stay on top of it. It wasn't like a smooth kind of thing. And I think if real estate owners put the work in, it's going to work out in their favor. So Marcus, I called them a couple days after, and I asked, have y'all calculated my debt to income ratio yet? Are you able to share what you've calculated with me? And the person who answered the phone said, no, I haven't been able to look at that, but what I did anyway, this is me, not them. And I said, I've calculated it on my own, and if you include the tenant income, it's under 20%, and if you don't include it, it's like over 50, or it's like 50 or 60, something like that. So it's gonna be really bad if we don't include that income, basically. So they annotated my application. They added a comment, and I think that's what basically did the trick, because the following day I was approved. So call out that rental income, upload bank statements, and here's what I did. I literally told them, this entry, this $2,500 a month, that's one tenant. This $1,400 a month, that's another tenant. The rest of it is salary or commissions. My wife makes commissions or whatever it might be. Another thing I did is that I asked them, so she said, even though she can't share the debt to income ratio because she said she didn't know this, I think this is like a customer service representative, not actually the loan officer. But what she told me is that she can share that they do their income verification through TransUnion. And she said, you can check with TransUnion, maybe they'll share the debt to income ratio. So I didn't call TransUnion, but I looked up the information, how they do income verification, and it's kind of shabby. So let's see, I'll try to put the document in the description, but for people who have an income over 40 grand, there's basically a 75% accuracy rate. They have models which predict that a person is a member of an income group, and there's like a 75% accuracy rate. and they claim that this is all based on tax return information. Well, no wonder there's a 75% accuracy rate, because your income fluctuates from your last tax return like all the time. And for me in particular, my rental income was not on my last tax return. I've bought those properties since I've placed those tenants after that tax return. So it'll be on my next tax return, but it won't be on the last one. So I think this is exactly the sort of edge case where calling into the loan officer and making them aware of the situation is going to work in your favor. Because I think TransUnion would have probably miscategorized my income, and it would have noted my debt, and that would have thrown off my ratio. So TransUnion says that they include real estate information in their income forecasts, but it doesn't specify how. So again, I'm assuming it's based on the tax return, because that is where they say they get some of their income information. Okay, so that is all the tips that I have for you. Basically, if you have real estate income which was not documented on your last tax return, speculatively, anecdotally, I think that's going to throw off your debt to income ratio. So just call in and try to get whoever you speak with. If you can, speak with a loan officer. If not, I guess a customer service representative is good enough. But get them to add that information to the loan application in the form of a comment or whatever it might be. Yep, that's the tip I have. Thanks. Talk to you later.